All right, all right, all right. All right. Happy Friday. Happy Friday. It's been a minute since I've done this Ask the Trader. Uh we should get a couple of people on today. I haven't done this in a while. I really didn't publicize it today. So today we're just going to do, you know, barbershop style talking. Any questions that you have, any stocks that you want me to analyze, any topic that you want to talk about. Let's have some discussion today. I'm trying out some new things. So you can go to the comment section. If you go to the comment section and write a comment in, first off, somebody let me know if you can hear me. I want to make sure that my volume is on and that you can hear me clearly. And once someone sends me a comment, I'll go ahead and start. But this is Ask the Trader. So the way Ask the Trader works is you ask me a question, and I'll try to analyze that. I'll try to analyze your question or that stock the to the best of my abilities. All right. So I'm just waiting for a couple of more people to join. If you could go to the comment section where you're watching this, just go to the comment section. Go ahead and send me a comment, any stock that you want me to look at. If not, I'm just going to start off with the S&P 500. All right, so let me go ahead and get started. Bam. All right, so I am a full-time day trader. I'm an expert in stocks, options, futures, and cryptocurrency. That's stocks, options, futures, and cryptocurrency. I have over 15 years of experience and over 25 to 30,000 hours of day trading and investing experience. And anything that we talk about today are going to be the opinions of what would Joel do. All right. Everything's an opinion. All right. So take the information that I'm giving you and go do your due diligence. All right. So if you haven't gone to my Ask Joel GPT, if you do have access to Chat GPT, just type in Ask Joel GPT. I'm one of the first people to ever create a GPT that's specific for stock market. So it has all of my tools in it, everything that I use from the 200-day moving average to the John Carter to 200-week moving average. So just play around with it. Ask, put in a stock, put in a stock, ask a question, put the time frame, and the Joel GPT will spit out the information for you. You can even ask it anything you want. When you're on there, ask, hey, what do you think about Tesla? Or if Tesla stock is up that day, hey, why is Tesla stock down today or up today? Or what did Elon Musk, what did Elon Musk say today that made the stock go down? You can literally ask it anything and it will pull from the internet and try to give you the best answer possible. So I like it. I do a lot of fact checking with my own Ask Joel GPT, so you guys should try it as well. If you want your charts to look like mine, I'm going to show you guys a lot of charts today. If you want your charts to look just like mine, you can go to my payhip.com/what would Joel do, and you can buy the Thinkorswim chart setup. It's only $50. It's going to be on the Charles Schwab. You have to have a Charles Schwab account to have access to the Thinkorswim platform. But once you have access to the Thinkorswim platform, you can pretty much make your charts look like mine. And I have probably the most beautiful charts that are out there, the most clean, most concise, and beautiful charts that are out there. So take advantage of it. You can, like I said, for $50, you can make your charts look just like mine. I'm probably one of the only traders out there that has an app. I do all of this stuff to help you guys out. If you go to the What Would Joe Do app now, it's free. But if you do subscribe to the app, you can either subscribe to the alert service where you can see what I'm buying and what I'm selling, because I am a real investor and trader that actually buys stock and show you guys my receipts, even when I'm losing, which hasn't been in a while. But you can also pay the $50 a month, and if you're a ultimate member, you're going to have access to everything that I teach, anything that I learn, the what would Joe do method, how I look at the market, the fundamentals of the market. So take advantage of it. It's the best deal on the internet. How often are you going to be able to get a guy that actually is buying and selling the market, showing you what he's doing and been consistent for the last 10 years? All right, so I've created this for you. So go ahead and check it out. There's a couple of places that you can find a lot of my videos, right? If you're on Facebook right now, because this is being publicized everywhere, you can go to the What Would Joe Do page. So, What Would Joe Do, you'll be able to find anywhere on LinkedIn, on YouTube, on Facebook. What would Joe do? If you go on YouTube, you'll have access to a lot of free videos, a lot of free content. All right, if you are part of the Insider Trading Room that actually has over 30,000 members, you can talk and rub elbows with other traders that are just like yourself. You can go to What Would Joe Do page to ask me any questions. People don't even realize that you can just go to What Would Joe Do Messenger. You don't even have to pay. And if I'm trading the market, ask me a question. I mean, I am a real trader. So, I try to make sure that that you have access to me. And then the Ninja Trading Room is a smaller group of members that if you ever purchased any of my products, all you have to do is show a receipt. You're going to get access to that video. At some point, I'm going to make it just as active as the Insider Trading Room, but the Insider Trading Room is probably the most active. And if you want to book a consultation with me, I'm trying to get all of this stuff out of the way before while I'm still waiting for people to come on. But if you want to book a consultation with me personally, how often are you able to book a consultation with a real trader, real investor, real knowledgeable, very handsome Howard University grad, golfer, swimmer, father, husband, individual? How often are you able to get in touch with somebody like myself and we can talk one on one and it's confidential? I don't understand why you guys are out here paying thousands and thousands and thousands and thousands and thousands of dollars to talk to people that don't even show you guys what they're buying and selling. $50, you got access to literally the best trader investor that's out there. I have no idea. That's probably why you're losing in the stock market, because you're not making solid, great decisions. Book a consultation with me. Let's talk. Let's talk about your strategy. Let's see what's going on. And you can go to Calendly, and if there is a spot available, go ahead and book a consultation with me. I won't tell anybody. Your friends don't have to know that I'm there to help you. You shouldn't be suffering in silence. This is why I created this, so that I can give to you guys, so that we can figure out what's going on. Because most of the time I'm sitting back day trading and investing in the market, and I'm sitting at home bored. I might as well help individuals while I'm doing it and not try to beat you over the head in price. I make all of my money from investing and trading anyway. So if I'm available, go ahead and sign up. All right. Cool. So let's go ahead and get started, because investing and trading is easy. You guys make it hard. A lot of you guys hate when I say this. Investing and trading is easy. You make it hard. Investing and trading is easy. You make it hard. You're the trader that's making this so hard. Investing and trading is so easy. It's so easy that I've been doing it consistently and giving you guys the most basic strategies that are out there. And I'm whipping the pants out of everybody that comes or tries me, anybody that tries to compete with me on their strategy or what they're doing. All right. And I've been doing this consistently over and over and over and over and over again. When you know the fundamentals of the market, you really can't be beat. Are you going to lose? Yeah, you're going to lose. But a lot of you guys don't know how to lose. If you are in business, you're going to lose. When you lose, does it break you, or does it build you up? Right? Most of us should be winning. If you're just doing the most basic strategies, you should be winning 70 to 80% of the time. A lot of you guys are winning 70 to 80% of the time. And then the one time you lose everything. That's on you. It's not the strategy. All right. It's on you. And that's what I help you guys do when we do our consultations. We sit down, we look at what you're doing. I sit back and I realistically tell you, hey, this is sound, or this is trash, right? Or if you're going to continue going this trash route, expect this, expect to lose everything. And a lot of people are all or nothing. They're like, look, Joel, I got $5,000 or $10,000. I got to make $1 million in 3 or 4 weeks. So if I lose it all, cool. If not, then great. And then I'm like, all right, let's try to figure out a plan to try to maximize the most amount of money you can possible. All right, we'll go into the options market. We'll look at crazy trades that may be able to pan out. And I'm just throwing that out there, as a consultant. That's kind of what I do. All right, so let's go ahead and start. All right, I see the questions coming in. Like I said before, if you're just now joining, if you want me to analyze any of your stocks, go ahead and write that stock in the comment section. Or if you have a question, go ahead and write it in the comment section. If you want me to analyze your stock, fine. Give me a time frame. So, I try to teach you guys trading versus investing. Probably one of the few traders that do that. Like, are you trading to make money in the next 2 weeks? Are you trading to make money in the next 2 months or 2 years? Right? Is this a short-term trade? Some of you guys are intraday traders. Is this a trade that you were just taking today, and you want to kind of figure out how or why you lost money? Or is this something that, you're going to hold for a couple of weeks? So it's very important that you guys give me all of the information, because it's easier for me to answer that question for you. All right, let's move on. Let's go to charts. Investing and trading is easy. You make it hard. Now, when I started Ask the Trader, I started all the way down here at the bottom. Started from the bottom, and now we here. Y'all know that Drake song, right? Now look at what happened. Just use your eyes. Use your eyes. Use your eyes. This is where I started. When I started trading the market, guys, it was pure luck, to be honest. It was after the 2008, 2000. Well, it was right before the 2008, 2009 real estate crash. So I've always been able to figure out and see where the market is about to go. That's just my superpower. That's why I'm able to call so many stocks like the Nvidias, the Teslas, Bitcoin, all the stocks that I've made you guys money on. I kind of have a feel for it, because this stock market thing is a business for me. I spend probably about 8 or 9 hours a day looking and researching the market. So I have a real good pulse on what's going on. So I kind of felt like the real estate market was about to crash. So I had to sell all of my real estate, and I had to figure out a way to make money in the market. And the only way that I was going to be able to make money in the market is with money. Right. And it's interesting that when a lot of people are losing money, they want to go out and get a job, and they want to get this person to hire them because it's money that somebody else is paying you. And none of us ever really worked on, a skill set that allowed them to make money. And this is the easiest and the first place that you have to go and learn how to make, because one day we're going to all be sitting on millions of dollars. And when you're sitting on those millions, how are you going to be able to make money if you don't have the skill set to make money, to have money, make money? All right. And there's different ways to do it, right? I don't really like talking in a general. I don't like to generalize everything, but you got to be able to take whatever you're doing and be able to make money off of it. So I consolidated all of my funds, and I started trading the stock market. So if you go to my What Would Joe Do page, you can always go there and look at the true Hollywood story to kind of figure out how I got to where I am today. But we started down here, and look at what the stock market did over the years. I hear so many people, get so political and talk about how the market was so terrible under Obama, and then it was so terrible under Trump, and then it was so terrible under Biden. But what do you notice from 2008 to 2024, which has been the last 16 years? that the market is rigged to go up in price. It does not matter who the president is. The market is rigged to go up in price. So if you're voting because you feel like somebody's going to make more money for you, then you're really not doing the research. All right. And I always tell people that the market is rigged to go up no matter who's in office. All right. So with the market going up from the bottom left of your screen to the top right of your screen, if you've missed out on this market, then that's on you, because it's the easiest money that was ever made. All right. The market is rigged to go up in value. If you're a doomsday, the world's coming to an end one day type person, the stock market is not for you. All right. You need to go into another field. All right. Because the stock market spends 80% of its time going up. I tell people that all the time. That's a real stat. 8 out of the 10 days, the market is going up. 2 of the days, it might go down. So if you're always looking for the market to sell off, and then you're waiting and waiting and waiting and waiting and waiting, and then it finally happens, you really only have a 10% chance of catching the market to the downside. Look at this, guys. Look at this. Look at this with your own eyes. This is a week chart that shows you what the market is. When do you ever really get a look? You see how little the blips are to the downside? And all of these rips to the upside that you keep missing out on, keep missing out on, keep missing out on, keep missing out on. We are at all-time highs right now. That means the stock market is the highest price that it's ever been in history. Yet, the world's coming to an end. Oh, the economy is so bad. Like, shut up. Like, y'all don't, like, y'all sound ridiculous right now. And I get irritated by it, because I'm like, real estate is high, stock market is high, and they're like, but what about me? Well, that's where you have to look yourself in the mirror and say, why am I not capitalizing on business? Why am I not capitalizing on what America has to offer? America has always been great. We've always been the best at everything, right? But TV kind of tells you that it's the other, that it's the other, that it's not, that the world's coming to an end. Like, are you serious right now? You must not talk to millionaires. I talk to millionaires every day. They the happiest that they've ever been, ever. All of them. And then the ones that are complaining, they're complaining because they can't make more millions. And they're doing consultation. Like, guys, millionaires are doing consultations with me on how to make millions more. All right. So you guys got to understand where the money is, because if you don't have it, then you're just not in the right place, or you're not in the right stocks. We talk about every day what stocks to be in. Every single day. I do it every single day. What's the stock? What's the stock of the day? What's the stock star of the day? Who's the donkey of the day? It's giving you an idea of what to be invested in, what not to be invested in. All right. The stock market is rigged to go up, is rigged to go up, is rigged to go up, and it's going to continue to go up. And as long, and guys, they're going to continue, like, even with these storms and these hurricanes that are going on, you know what the government's going to do? They're going to print more money. And yeah, money's going to flow into all of these different communities and get them going again and get the economy going again. But guess what? A lot of that money is going to flow into the companies that provide the services and the equipment to these particular areas. So then their bottom line is going to go up. Everything is interconnected. Even when you see something disastrous like this happens, you can capitalize on it in the stock market. And it sucks to say that, but that's why the market is going to continue to go up. Inflation is going to continue to go up. And if you're not a bull, at least long term, you're going to miss out on the next 10 years. All right. Now, I'm going to give you a couple of stats before I start looking at stocks. This is the second year into a 4-year bull run. 2 years ago, in October, I did a video. The volatility index got above 50. All right. Let's go ahead and look at the volatility index. The volatility index got above 50 2 years ago. It's 2024, right? So let's go back to 2022. 2022 is right around, I don't know, right around here. Wait, this is October, August. Oh, this is October. September. All right, September, October. 2 years ago, y'all see this? The VIX didn't get above 50, but the VIX popped to about 35. All right, now think about this. Bull runs last 4 years. A bear market lasts on average 344 days. All right. Everybody knows that 2022 was terrible. All right. 2022, the market from January 1st, pretty much all the way to December, went down in price. All right. But a year is what? 365 days. A bear market lasts 344 days. So we pretty much knew, all right, if on average a bear market lasts a year and the market's been down for a whole year of all of 2022, it was almost guaranteed that the next 4 years were going to be up in price. Well, this is when the volatility index hit 30. I created a video. It was after the bear market, and the bear market was coming to an end, and I created a video literally the 1 or 2 days before the market turned around. All right, one of my many great calls. And I was like, all right, guys, this is the bottom. I'm about to go all in. The VIX usually doesn't get higher than about 30 to 50. 30 to 50 is usually when you should be buying the market. All right, I've been teaching this over and over and over again. Now the volatility index is about 20 right now. But when the volatility index starts to get around 20 to 30, that's when you should be buying stock. Now, why do we have a lot of volatility now? We have a lot of volatility now because elections are in November. All right, elections are in November. We don't know who's going to be the president. We kind of know that if Trump is in office, business is going to be a little bit more lenient. You're going to get a lot more mergers and acquisitions, M&As, when other companies buy other companies, which is great for the stock market. It lets you know that it's bullish. You're going to see the crypto market go up in price, okay, because he says that he's all about crypto. But what happens if Harris gets in office? Well, what happened under Harris Biden? Under Harris Biden, what did they do? They created the infrastructure bill. The infrastructure bill is the reason why NVIDIA ran 1,000% in 2 years. It's why in every single solitary city that you go into right now, there's building going on. If you're in Decatur, Georgia right now, you see a whole spaghetti junction type, I don't know what, a renovation of the highway where you see all of these different highways. Spaghetti Junction is this place up north where there's like 8 highways that come together. Well, in Decatur, there was only 20 and 285. And now you got like 6 or 7 different bridges being built because that infrastructure bill is why all this building is happening, within the United States. All right. So you kind of know that industrial wise, that's going to keep going up in price. Real estate will probably still go up in price, which is why Harris is always talking about affordable housing and all this, that, and the other. But it doesn't mean that under Trump, the same thing can't happen, because most of the time when they put things in place, if it's great and it's making a lot of money, they're not going to mess with it. All right. So it doesn't matter who's in office, but you kind of have an idea of what's probably going to keep running. Again, if Harris gets back in office, you're really going to start seeing NVIDIA and semiconductors, maybe even electric car type stuff, continue to go up in price. The same thing that has been going up. That's kind of why I like when the incumbent vice president or the incumbent president stays in office, because you at least know what to continue to buy. Now we got to go back and figure out what was up when Trump was in office to kind of get an idea of what was going on with the market. But all that to say that 2 years ago, that's when the market turned around. So if we go back to the spiders and we go back to October 2022, you kind of get a view of what was happening. This was 2022, right? 350 days later, the market started to go up in price. How did we know that this market was about to change? Well, look, if you learn how to do trend lines, you literally only had to do this right here. Draw one little line. One little line. One little line. A lot of y'all pay $15,000 to kind of figure out when the market's going to turn around. And all you had to do was look at this one little line. And when we broke, the trend is your friend until it ends. Look at this. This is when the market was going up in price. Once we broke that trend, y'all know when that was? That was January of 2022. Think about that. We broke a trend to the downside January of 2022. 1 year later, we broke a trend February of 2023. 370 days later. It started to turn around earlier than that, and you weren't even late. And if you would have known this just by drawing one line, you saw it go down, two lines, the S&P starts to go up. Now, for you newbies that are here, the S&P 500 represents the 500 largest companies in America that pretty much runs the economy. So if those companies are doing well, the economy is pretty much doing well. You might not be doing well, but you ain't the economy. You ain't the 500 largest companies that are hiring all of these different people to work for them. The people that are working for these companies are doing well because you guys come to me all the time. I work for so and so company. They give me shares. Look at how much money I got, right? So either you need to get a job at one of these Fortune 500 companies, or you guys are going to have to learn how to invest in these particular companies, even if you only got 10, 20, $30. And if you don't have 10 or 20 or $30, then that's a problem. That's a problem. That's a you problem. I get this, Joel, you sound like a black Republican all the time. I'm like, you can't go out there and find 10 or 20. I can go on the side of the highway and panhandle and get $30. It's excuses. I get it. All of us are not dealt the same cards. I get that. I get that all the time. Some of us are born with a silver spoon in our mouth. Some of us have to work and have to work hard at getting whatever we have. All right. But we still see everything the same way. We all can buy the S&P. We all can buy Apple or Amazon or Google or Nvidia. We all can learn the options market and not spend a whole bunch of money on it. You guys can come to me right now. You can ask me questions right now. I'm not even going to charge you. Excuses. Unless you sending me messages for free and getting educated, I don't want to hear it because I'm here to help you. I've always been here, and I don't like hearing excuses and sob stories. I've heard every sob story on the planet, and I have my own sob stories. All right. And yes, I do feel for you. I do. I'm not saying that, hey, don't come to me and cry on my shoulder. I like that. But after a while, I'm like, yo, this is about the 15th time you cried on my shoulder. Maybe we need to seek other help. All right. But the S&P 500 went up, it went down, and then look at what happened. This is what you missed out on. Even on this little blip right here. Y'all see how easy I make this look? Market goes up, trend down, it goes down in price. It starts to go up. Look, all it did was break this trend and keep going up. And then it went down. And then once we broke that trend, but Joe, what if I get in right here? It looked like this, right? Who wants to get in right here thinking, because what do most of us think when we see this? when we started to break this trend and go back to the upside, either a lot of us were trading to get to this point, or we were trading to get to this point. But sometimes you just get lucky. And you're sitting up right here and don't even know what to do right now. Right? You're like, oh my God, I haven't had this much money ever. And that's a good position to be in. But look at how many times you guys could have re-entered. But you're too busy listening to negative Nancy's tell you what they think the market is going to do because they done researched all night. And it says that these banks are going to fail at some point, and it's going to be just like 2008 or 2009, or this hurricane's going to come, and then all the insurance companies are going to spend up all the money on the planet. Well, you don't understand how money works, because all they got to do is go into a room and hit a little button and print the money, and the problem is solved. And then they don't care, because then they're like, all right, the taxpayers are going to have to pay for this money that was printed, which causes your real estate and your stocks and everything else that are around you go up in value. So if you want to keep up with the Joneses, if you want to keep up with the Harrisons, if you want to keep up with the economy and you're not invested in real estate or stocks, you are going to get left behind. Period. I got friends. Oh, well, houses are high now. I'll just wait a couple of years before rates come down before I get one. Then the house is 50% higher. Well, then I'm just going to wait around and get, you know what, Joel, I'm going to wait until I have a whole bunch of money, and then I'm going to start buying stocks. Or Joel, I'm going to wait until I get this job. And then when I get this job, then I'm going to start buying stocks. Joel, I'm going to wait until I get rich, and then I'm going to buy real estate and stocks. Well, once you get rich, you don't need to buy real estate and stocks no more. But how you going to get rich is the question. Have y'all ever played cash flow? It's probably the best game on the planet to play. It's called cash flow. It's literally the monopoly. It's what Monopoly should have been. You buy businesses, you buy stock, you buy real estate, and then they give you a job. You have, like, you can either be, you don't choose your job, but some people choose their jobs when they play it. But you get these cards. It'll say you're a dentist, or you're an engineer, or you're a lawyer, or you're a doctor, or you're a teacher or a janitor, and it shows you how much you get paid. And everybody's on the same board, and it shows you how to become wealthy no matter what your income stream is. The best game ever created, probably one of the most fun games I've ever played. It's called cash flow. Y'all need to go out there and get it. Play it with your kids. My kids asked to play it with us. That's how fun it is. All right. But it's going to teach you to change your mindset so that you kind of understand what's happening with the market. The market right now sitting at high. This move right here can easily be this move that we see right here that goes to 7,000. Because as long as economies are guys, just last week, China said we about to print billions and billions of dollars. We're tired of America making all this money and having all these people investing in their economy. We're finally going to start printing money too, again. Well, all of these markets are interconnected. You can buy Alibaba right now, which is a Chinese stock, Baidu, Neo. You can buy all these Chinese stocks. And if they're about to inflate their economy, where y'all think the money's going to go into? The stock market and real estate. And then when the Chinese get rich, where are they going to spend that money? They can come on over to the United States if they want to, buy a couple of houses, buy a couple of cars. But when economies start to print money, everybody benefits from it. All right. And then, yeah, you can go deep down the rabbit hole and figure out, currencies and whose currency is stronger to which other currency, depending on who's inflating their economy. I get all that. Like, I don't want to hear y'all, Joe doesn't know what he's talking about. It doesn't work like that. I get that, right? I'm going to always talk in a way that everybody can understand. But for the most part, they're about to inflate their economy. And like I said before, we're about to inflate our economy again just because of these horrific storms that just happened. and it's going to find its way into the market, which is going to send the market higher, which is going to send the bears even further into hibernation. And we're still only 2 years in into a 4-year bull run. Bull runs last 4 years on average. Bear markets last 1 year. Bull markets 4, bear markets 1. Bull markets 4 times the amount that a bear market lasts. And when a bear market comes, guys, I get it. It destroys accounts. It goes down in value. 2022 was terrible. Terrible. But what do we also learn? What kind of makes the market, like what can we listen out for and kind of understand what's going to happen in the market? Well, if you see that the feds are raising interest rates, if they're raising interest rates, it's going to cost businesses more money, which is going to cause their bottom line to go down. As soon as the feds decided to start raising interest rates, that's when the market started to go down. Well, what just happened 30 days ago? Was it even 30 days ago? 14, 21 days ago? The feds finally, after like 2 years, decided we're going to lower interest rates. Well, if they raise interest rates and the market kind of fell and then it recovered and continued to go up, well, the minute they decide to lower interest rates, we should get a spike in the stock market, which is what we've been seeing right now. All right. It doesn't always work perfectly like that, but just think about that. When the volatility index is very, very high, over 30 or 40, that's when you should be buying the market. It's probably about to turn around. When the feds start to raise interest rates, usually the market's going to start going down. All right. I guarantee that when the Fed started to raise that interest rate, the volatility index started to rise. All right. So cool. So that's just a lesson in kind of learning with some of the tools that the government uses to turn up the market or turn down the market. You guys should know what those different things are as well. And you guys need to also listen out for certain things. You hear that the government's about to print or they got some type of bill where all of this funding is going to go into the economy. They're basically telling you we're about to inflate the market. And the people that's not invested in any of these businesses, we going to make them pay for it. Okay. And that's why if you don't own any real estate or if you don't own any stocks, you are suffering right now. You're like, oh my God, I don't know what to do because the cost of everything has gone higher. Your salary probably went lower. And you're like, I don't have any assets to lean in on. Right. And that's where we're trying to get you to. All right, cool. I'm gonna answer some of you guys' questions now, since we got a lot of people. So this question is from Shamika. She said, "Hey, Joel. Now look, if you're looking for somebody to plan your vacations, JTS vacations, y'all need to holler at Shamika. She planned I think our last 2 trips, our Lake Tahoe trip and our Maldives trip. All right. So y'all holler at Shamika. What's going on? We got Andrew Willis. What's up, man? What's going on? Next question is Brandon, Mr. Miner. He says, are we investing in AI? Yes. This is the beginning of artificial intelligence. All right. Chat GPT that I'm using right now, that's artificial intelligence. All right. That's at work. Like look, guys, we didn't, I look at it like this. We used to have MapQuest. We used to pull out maps. We had MapQuest when we wanted to get around. And then all of a sudden, navigation came out and we were like, we don't need MapQuest anymore. Well, that's what AI is to Google. When we first got Google search or any type of searching engine, it changed our lives because we could fact check and we could look up any type of information we wanted to. Well, guys, AI is like a Google search on steroids. And a lot of you guys have no idea how it works. So this is the beginning of the AI revolution. And anytime you get in the beginning, that's how you make millions and millions and millions of dollars. I know it doesn't feel like it. I know I know that the naysayers are trying to scare you and say that it's like the .com era. It might burst, but it's going to balloon before it bursts. So hopefully you can make millions and millions and millions of dollars before it bursts. And we talk about a lot of great AI companies that are out there, like the NVIDIAs, like the AMDs, like just about any company, because if you're not involved in AI, you're not going to be around anytime soon. Oh yeah, he said, "Are you investing in AI?" Yes, definitely investing in AI. You can invest in certain stocks that are pure AI, but AI diversifies itself over the whole industry. So you got to be careful at what you're actually looking at when you guys decide that you want to invest in AI, and kind of figure out what type of AI you want to be invested in. But we talk about it all the time in the room. That's a good question. Ooh, this is a big question. El Panama says, "I like to hear your version of how to play XOM. I was told that it goes between certain levels every 3 months. I started watching it in July, but it didn't drop down to the $90 area in August or September, as I was told. But I just kind of chopped it up to the war. I kind of chopped it up to the war overseas. I don't have my glasses, guys, so sorry. Just wanted to know in truth about the XOM moves." All right, so XOM is Exxon Mobil, which at one time, guys, was the largest company on the planet. So if we were to pull up XOM, all right, I'm going to do something else too. Let's say you didn't know what XOM was, and you said, "I don't even know what XOM is." There's a couple of places that you can go to kind of get some quick research. Of course, I'm going to tell you that you should go to my chat GPT and go to Ask Joel GPT and then say, "You know what? What is XOM?" You better not mess up on me. All right. ExxonMobil is one of the world's largest publicly traded energy companies. It operates in various segments of the energy industry. All right. So it gives you details. Now, this is through my chat. All right. Now, you can go on any GPT and get the answers that you need. But because mine specializes in companies and the stock market, you're going to get different types of information. Okay. So, in case you wanted to know something about Exxon, let's say you didn't know how big Exxon was. And a lot of you guys are buying stocks. And let me take this off so that you guys can see. A lot of you guys don't know that when you invest in a company, you're investing on how much that company balloons in price, not the stock price. Stock price is an illusion. If you come in, if you're a person that has $200 and you're like, "I'm just going to buy as many $1 and $5 companies as I can," that's where the mistake is. All right. You want to buy companies that can grow in value. Okay. But you also got to know how big that particular company is, because if the company is too big, then it's almost impossible for you to make the type of money that you want to make on it. So, for example, if I was, it's called the market capitalization. It's called market cap. Anytime I want to know how big a company is, I ask what the market cap is. So, if I was to go into the Ask Joel GPT and I said, "What is the market cap of XOM?" It's going to tell me exactly how large it is. All right. As of October 2024, Exxon is $549 billion in size. This is an important number because a lot of you guys didn't know that Exxon was that large. If you were to take all the shares that company has and you multiplied it times the stock price, it's going to give you 550 billion. You make your money on the expansion of that company. So if Exxon ever, let's say I don't know what the stock price is. Let's say I had $1,000 in Exxon. Most people are like, "Well, Joel, can it just go to $2,000 tomorrow if a person's willing to pay $2,000 for it?" No, that's not how the stock market works. In order for your $1,000 to be worth $2,000, another $549 billion from somewhere in the world has to be invested in Exxon in order for your $1,000 to be worth $2,000. If you want to make 5 times your money, this company has to be a $2.5 trillion company, which is how big Apple and Amazon and Google are. All right. A lot of you guys didn't know that. So, yeah, it makes a lot of sense now to buy a company that's only $1 billion, because it's easier for something to grow from $1 billion to 10 billion than it is from 100 billion to 1 trillion. Okay, because that's how much money you need to make it double in price, to double your stock price. So you're making money on the expansion of the company. But I want to answer El Panama's question. So he wanted to know what he wanted to know if quarter by quarter Exxon fluctuates in price. So we're going to look at its chart. So when I look at the chart of Exxon, I'm going to pull up a day chart. And this is what I always teach also. If the 200-day is moving up, you increase your luck. If the 200-day moving average is pointing up, you increase your luck of making money. When the 200-day is angled down, you don't need to stay around. Do y'all see this blue line? Do y'all know that once this blue line started to go down, I could have told y'all right here to get out of Exxon, and I didn't have to pay for a $20,000 class to figure this out? A lot of y'all didn't know that. All right. If the 200-day is angled down, I don't want to stay around. I want to get out of this company. If the 200-day is angled up, look how long it went down, guys. Exxon went down from 2000. This is what, 2017, all the way to 2021. For 4 years, I know people who were buying oil for 4 years saying it's going to turn around. It's going to turn around. I've been reading about it. It's going to turn around. It's going to turn. It's not going to turn around until it turns around. When it starts to turn around, then Joel will peek up and say, oh, you know what? I think I might buy it now. Joel, how did you figure that out? How did you know to get in literally months after it turned around? I'm like, because if the 200-day is up, I increase my luck of making money. If it's angled down, I don't want to stay around. Oh, does that only work on Exxon? No, it works on every single thing that y'all buy and sell every day. Joel, it can't be that easy. It is that easy. And it's always been that easy. Y'all make it hard. And these teachers out here make it hard too, and make you think that this stuff is so complicated you can't figure it out. When the 200-day is angled sideways or down, you don't want to see me messing around with this stock. As soon as it starts to go up, you're going to increase your luck. Now let's look at the last 3 months. As long as the 200-day is angled up, I'm going to buy it. Everybody knows it. That's the what would Joel do method. But Joel, how do I know when to buy it? Well, if the 200-day moving average is the average price of this stock, think about it. If you go to the grocery store and eggs are $3 for a dozen eggs, right? And let's say it's been $3 for a whole year. And then all of a sudden there's a hurricane. And then now eggs are like $5 or $6, right? And then all of a sudden, once everybody's able to buy those eggs again, the eggs go down to $1. Well, what's the average price? The average price is $3, right? You've been paying $3 for so long, you know the average price is $3. That's what this blue line is. The blue line is the average price. Anything below that price is on sale. Anything above that price is you're overpaying for it. So a lot of people love buying Exxon. I could have told you when to buy Exxon right here and right here, because this is the average price. Why do I want to pay anything more than what the average is? This was the average price in June. So you're looking at the Thinkorswim chart. You guys can pull up the 200-day moving average on any platform that you're using. All I want to do is, first of all, I want to know if this is bullish. If the 200-day is angled up, I increase my luck. I stick with Exxon. But Joel, how do I know when to buy it? You buy it when it gets close to its average price. Or if you use the what would Joel do method, all I'm going to do is wait until it bottoms out, maybe hits the 200, and then as it starts to break that trend, that's when I'm going to get in. You break the trend, that's when I get in. I know that sounds corny, but I have to create these corny sayings so that you guys can remember it, because this stuff is easy. How did we know that this was here? We knew what this price was way back here. When the price was here, you could have put in an alert. Oh, I know to buy this when it gets around 109. A lot of you guys, because you're not looking at charts, y'all looking way down here at 95. In order for it to go to 95, we got to be in a bear market. You see how the 200-day is angled down? So you don't want to stay around. It's going to hit a lower low. When the 200-day is angled up, it hardly ever comes back to the price that it hit when it literally was doing bad as a company. The reason why this company is doing well now is because now the 200-day is up. People are buying this stock. So it's not going to come back 100%. It's going to come back to the average. Then it's going to jump back up in price. Then it's going to come back to the average. Then it's going to go back up. And guess what, guys? We're probably going to come back down to, guess what? The average, 112. One tweezy if you were in Atlanta. Y'all remember 112? I'm not going to sing any of their songs. All right. But if it comes down to the 200-day moving average, that's where I know to get in. Or, like I said, I don't try to buy it at a price unless I'm, if I'm buying it long term, maybe I'll do it. But let's answer the question. So if this is October and we were to go 3 months out, 3 months out was what? What's 6? January, February, March, April, May, June, right? If we were going to June, you see how this dropped in price, and then right around June, it started to go up in price. We hit the 200-day moving average. Then we started to go up in price. Then from June to September, we went up in price, and then it dropped down again. Now it started to run from September. Now it's October, November, December. Maybe it starts to drop down in price as well. But you stay with the company because the 200-day moving average is angled up. If you want to see what I see, this is all I see. I see we go down in price, hit the 200, break the trend, then we start to go up in price. And you see how it makes it hard for you to make money because it's just going to zigzag or stair step to the upside. That's normal. All stocks stair step up and they stair step going down. They don't make it easy for you to make money. Okay. But you got to stick with it. What would have made me stick with this company? The 200-day angle up. As long as that 200-day is angle up, that gives me the confidence that this trade is not over yet. Now, we might come down and hit the 112 real quick. And then if we sit at 112 for too long, then that 200-day is going to start turning around. If we sit at the 112 for 3 months, that's telling you that the market is probably turning around. And remember, guys, the stock market is way smarter. It's easy to predict, but it's way smarter than what you think, because they have all of this knowledge 6 months in advance. All right. It's not real timing. And that's what I tell people also. What you see right here is the result of them knowing that the interest rates were going to drop 3 or 6 months ago. Okay. And that's what you're playing. All right. So hopefully I was able to answer that question, or it made sense. Spent a lot of time on it, but that's what I do. All right. Shanika said afternoon, and thank God it's Friday. I'm watching videos and I'm trying to make sure I understand what are the best resources, video or books for mastering the 513 crossover. All right. So the only, I love the internet now. I hate books. Anybody that wrote a book regarding the stock market, even 5 or 10 years ago, I believe is obsolete. Now, that doesn't, don't kill. Don't be like, well, you're no Warren Buffett, Joel. You didn't make all this money. I get that. It depends on the information that you're looking for, right? If you're looking for basic fundamental things like learning what the volatility index is, learning what crossovers are, you can find books just by literally Googling, teach me 20-day crossovers or 200-day moving average. Or you can literally go on Chat GPT and find that. One of my favorite books as far as candlestick chart reading is going to be Steve Neeson. Every trader should have that book just to have, right? As far as the 513 crossover strategy, it literally was the very first strategy ever created for trading that a lot of you guys don't use. You can go on Investopedia right now. Google, go to Investopedia, type in 513 or 58 crossover pattern, and it will tell you how to use it. You could even go to Chat GPT, ask Joe Chat BT, and say, how do I use the 513 crossover strategy to profit off of the stock market? And it will give you information. And if you ask it different books that you can find, it can also help you answer that particular question. Good question, though. All right. Amanda said, what do you think of SoFi for next week? Looks like it could shoot higher, but could have a Monday pullback. All right, so SoFi, guys, is a bank. It's a fintech bank. All right, and it's one of my favorite banks to buy. So if I was looking at SoFi, she is looking for a trade. Now, guys, here's the definition of trading. Trading is when you buy something and you sell it within a 12-month period. Day trading is 1 to 7 days. I know a lot of you guys think day trading is getting in and out the same day. That's intraday trading. Day trading is up to 7 days. Anything after 7 days is considered a swing trade. A swing trade can be anything from 7 days to 365 days. Anything more than 365 days is an investment. All right, very important. So we're looking at SoFi. So I'm going to try to make the charts look a little bit cleaner. She wanted to look at something next week. So when I'm looking at something that short of a time frame, I'm either going to look at a 1-hour chart or I'm going to look at a day chart. So if we were to look at a clean chart, and let me take some of this stuff off. All right. So first of all, guys, what do we notice about SoFi? Even though I'm invested in SoFi, you can expect this stock to go down, because when the 200-day is angled down, you probably don't want to stay around unless you really believe in the company. And I really believe in the company. So these are one of those companies where I'm buying it as an investment. So as an investment, well, it doesn't have a 200-week moving average yet, but I believe in it for the long run. Okay. But for now, if it starts to go down in price, guys, I expect this to go down in price, because what you want is you want it to stay here and you want it to kind of stay at this price. I know it sucks to say this, but you probably want it to stay at this price for like the next 6 or 12 months, because if that happens, that's going to get this 200-day moving average to start angling up. And if this 200-day starts to angle up, pension funds, mutual funds, everybody's going to want to start jumping in it. But I don't want to get off topic. She wanted to know about a shorter term trade. All right. So what do you think of SoFi for next week? Looks like it could shoot higher, but could have a Monday pullback. So if I was trading something like SoFi, I know that it's a trade. I'm going to use something called the Ichimoku. All right. The Ichimoku is this yellow line that you see here. So what do you guys notice? Yes, the 200-day moving average is angled down. I get that. So let me just take that off because I don't want you guys to get confused. So let's just take the 200-day off. And now we're just dealing with SoFi. SoFi is bullish. Okay. Once we got above this cloud and we got what we call a 513 cross, which is what we were talking about earlier. That's a cross right there to the upside. Here's crosses to the downside. But remember, once you get above think of the Ichimoku like a real cloud. You get above the cloud. Like if you were flying in an airplane, flying, and you are a pilot, the very first thing you want to do is get above the clouds, right? So anything above the clouds, you don't have to worry about getting rained on or the plane getting, lightning. hitting, the wings of the plane. So once you get above the Ichimoku, it tells you that there's bullish pressure. I like to trade things like this when it gets above the Ichimoku and when we get a 513 cross. There was a 513 cross here on Thursday, and then we ran from Thursday all the way till Monday. All right. So Thursday, Friday, and then Monday. So that's about a 3-day move. Then you got a 513 cross here on a Tuesday, and it's already Tuesday, Wednesday, Thursday, Friday. All right. So the last time we got a cross, it went for about 3 days, and then it kind of sold off for about 3 days. And then now it's been up for about 4 days. So if I was in SoFi, it looks like it still wants to push higher, but I need to see where it can push to. So I'm going to pull up the day chart. Okay. Now, if Joe do method, you're going to learn that oh, let me take this off. Sorry about that. When you're learning the what would Joe do method, you're going to learn a couple of things. First off, you're going to learn that stocks, I don't care what we're looking at. If it has $1 billion market cap or higher, it's probably when it trends, when you get a 513 cross, stocks usually trend 10 to 14 days. 10 to 14 days. But every stock is also going to have because there's so many people that are buying it all the time, it's going to have its own special movement. So what do you guys notice? Like this very quickly, what do you guys notice? Y'all see a move right here. Y'all see a move right here. Y'all see a move right here. Y'all see a move right here, right? So when I look at something, the reason why I'm able to break down a stock within 1 minute is because of what I see, not by what I hear. You're buying SoFi because it's a fundamentally good company. Great. Do all your research. Great. But when you bring the technicals in, I gotta see something. I gotta see a pattern. And if I see that when this 513 crosses from 7-8, it usually goes up from 7-8 to about 7-18. That's about what, 10 days, guys. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. Then it went sideways. And then it went down. Then it crossed again. And I promise you, it was probably 10 days because stocks usually on average go up 10 to 14 days. This stock went up. Now here's something also. The 200-day is angled down. So a lot of the times I'm not going to really trade this, but it looks like SoFi is trying to turn around. Usually if the 200-day is angled down, I'm only taking these shorts. But I'm trying to answer the question, what do I think? Well, there was 10 days here. When this 513 cross happened on the 19th, it started to peter out 11 days later. So that was 10 days, 10 days. This is a cross right here, September the 12th to September the 19th. That's 7 days. So you got 10 days, 10 days, 7 days. What do you think that's going to be? Probably 7 to 10 days. When did the last cross happen? The last cross happened on October the 4th. 10 days later is October the 14th. So it's already been up 6 days. The 14th is going to be what? Monday. What's today's date? Am I right? What's today's date? Today's the 11th. So that's going to take you to the 14th, right? There's your 7 to 10 days. So does it look like it's about to turn around now? No, but it's probably going to turn around within the next 2 to 3 days. Y'all see how I was able to get that easily just by looking at what it did in the past. There's a lot of traders that actually trade off of literally measurements. Like they'll take a ruler and literally will put the ruler down and see how far that is, and then they will put that on their charts, and it's almost exact on how much it moves in price. I don't do it because that's just too much work. I just try to get in within the first 2 days of a crossover, and then I just sit there and watch it. All right. So hopefully that was able to answer your question. Yes, it looks like you probably got about another 3 or 4 days. But guys, sometimes you get lucky and it runs for 30 days. And then y'all send me a message and say, Joe, I got out too early and this thing ran 20 days. So what would Joe do method is trash. And I'm like, you still profited, right? So it's up to you to go back and see how long these days are to the upside. When this stock is bullish, we'll go back to a bullish period and count. Like these are some serious bullish moves. Like this was a 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. Not really. This was about a 12 or 13-day move before it started to go down. When this 513 cross happened, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, you see you had about 13 days before it started to go down. Okay. Does it mean that there was something wrong with the company? No. You get to make money for 10 days. If you can't make money in 10 days, you don't need to be a trader. You can get in literally late on the second, third, or fourth day. The problem is you don't know what day you getting in on that trend because you're not using a crossover strategy where you can count and say, all right, I'm in on day 2. I'm in on day 3. That's the what would Joe do method. The what would Joe do method is being able to answer the question before you hit the buy button. What day are you in? About what day you kind of want to get out of it, right? By looking at your charts. Are you dealing with a bullish stock or are you dealing with a bearish stock? What is the time frame? I need to work backwards. If you want it to go out 3 months, I'm not going to use this chart. I'm going to use another chart. And I see a lot of you guys do that. You guys will use 10 different charts for an intraday trade. Now that don't even make any sense. Do y'all know that what happened yesterday has nothing to do with what that stock is going to do today? It does have something to do with where it can go. But I wake up at 8:30 every day not knowing if I'm going to be bearish or bullish the next day if I'm going to intraday trade. That's why I trade way better than most of y'all, because I know what affects what. Yesterday's news, you can study all night long and you can wake up and be like, why SoFi not going up for an intraday trade? Because what happened yesterday has no, it could have been something that came in on the tube 5 minutes ago. And if you studied all night long, you didn't know that this particular thing was going to happen with that stock. That's why when you're intraday trading, it should be one chart and it should be fast. If you're trading over a 7 to 10 day period, I use the hour chart. If I'm trading anything that's longer than 15 days, I'm going to use a day chart, and I don't mix them, because once you mix them, now you mixing strategies. That's why it's hard for you guys to trade, because you guys got teachers that are teaching you to look at this, to do this, then look at this chart, then look at this. And those are traders that just don't know how to trade. I promise you they don't, because they won't show you no receipts. Show me the receipts. If you're using all this information and all these different charts to trade this one little thing that's going to go up or down for 10 days, then show me some receipts. Or show me a stock where this happens all the time. This is why I can pull up any stock no matter what we talk about, and it's the same pattern every single solitary time, because I'm a real trader. I understand how the market works. And I'm not saying that to boast and brag. I'm saying that a lot of you guys are listening to cats that ain't trading the market, and that's why it's hard for you. All right. Find a buddy, find somebody that's trading the market that understands the market and the moves of it. All right. I say that all the time. All right. Because I hear a lot of horror stories. Y'all keep me in business because I do my consultations, but I don't want to do consultations. I'd rather be golfing. All right. But I do this for you guys. All right. Good question. Hopefully I was able to answer that. Could it have a Monday pullback? Yes. But more than less, I would say you got about a 50% chance of it turning on Monday, just because you see how that looks just like this, that looks like this, that looks like that, and the 200-day is angled down. So if I was a betting man and you've been making money for the last 6 or 7 days, take your money and go, especially if this thing is up 4%. If this thing is up 4%, the options market is probably crazy. Let's see how much the options are up today. The options are up 170% today. Take your money, or at least sell half those contracts if you were buying. I'm just assuming that you were buying options. If you weren't, if you're in the stock, sell half your shares and then let the rest ride. Okay. Because when you get a pop like this in one day and you see that it's been up 6 or 7 days and you still got 100% pop, take those funds. All right. Or sell half of it and let the rest ride. All right. Good question. All right, next question is about SoundHound. Why is oh, SoundHound, are you still into it? Yes, I am, and I'm into it long term. Okay, so SoundHound, guys, is if you go on your app right now, SoundHound is like if you hear a song that you want to hear and you take out the SoundHound app, you can let the phone listen to the song and it will tell you what it is. And I do that a lot. I'm like in the car and I'm like, I don't know the name of this song. My mother does it all the time when she's watching TV. She loves ballads from like movies. So, when we're in the movie theater, she'll just pull out her SoundHound and try to get the name of the song. Well, SoundHound, guys, if you notice, it's now called SoundHound AI. Everybody's adding AI to the end of their name so that they can get funding. Now, why am I buying SoundHound? Remember, I'm not buying SoundHound because it's $4.82. All right. SoundHound could have been $482 a share, and I still would have bought it. Now, why do I want to buy it? Well, for one, the 200-day moving average is angled up. So that tells me to stick with it no matter what. No matter, I know that it went from $10 all the way down to $4. The 200-day is angled up. All it did was came back to the average price for you guys that are scared of SoundHound. And look at what it did. Every time it got close to the 200-day, people bought it up. Well, it got close to the 200-day again. And look at this, guys. We got a 513 cross, and it's day one. How often do you see this? Please don't run out there and buy it. All right. But if I was a day trader, I'm sorry, if I was a swing trader and I was using the what would Joe do method and I was looking for a 513 cross, this is when I would get in. Why? Because look at what happened every time it crossed. Every single solitary time it crossed, let's go all the way back to 2023. Every time it crossed, it got higher at some point. Look at this. Every time a 513 crossed, it went higher. Every time, well, not every time. Look at this time. Now, if the 200-day is angled down, you're supposed to not stay around, or you want to short it. So if the 200-day is angled down, then when you see red, you want to short it. But let's just look at when it has a cross. So let's just say you took every single trade to the upside. You took this one, you lost. So it won like 3 times. That's a 4th win. Watch this. We're going to count. That's a 4th win. Look at this. Cross. That's a 5th win. This is a 6th win. This is a 7th win. This is an 8th win. And guess what we're doing right now? Now, guys, that's 10 trades. You remember how I told you you're supposed to be winning about 80 to 90% of the time if you're using the what would Joe do method? You just saw with your own eyes. If you bought it right here, you had a 90% chance of making money. Please don't take this trade just because I'm telling you, because of what I'm showing you, because a lot of you guys will put all your money in this. You will lose. It'll be the one time that it loses, and then it'll win 9 more times. Then you'll come into the room, try to trash me, try to trash the what would Joe do method when it was you. You shouldn't have bet all your money on this particular trade. But this is how you do it. All right. And I like it because let's go and see how big SoundHound is, right? So I'm going to go to Chat GPT. I'm going to say, what the heck is SoundHound? And how big is it in market cap? All right, so it's searching. It's gonna give me the information I need. So SoundHound AI is a company that specializes in voice AI technology, right? So a reason why, so I like this company because Nvidia was buying this company hands over fist. So I think Nvidia was buying it because SoundHound is now being introduced in different vehicles. So when you go into your vehicle and you hit the little button and you're like, play Taylor Swift or or play Scrappy, right? Nuck if you buck. You know what I'm saying? And then SoundHound technology will hear it, and then it will it hears your voice, and then it will apply the message for you. So that's why I like this company. But what I really love about this company is that it's $1 billion in size. Now, if you've ever taken any of my classes, y'all know that 1 billion is the sweet spot for me, because companies like this can go to 10 billion easily. I could put 10,000 into this company. It'll be worth $100,000 very easy if it starts to move up in price, because 1 billion to 10 billion is 10 times your money. Now, once it gets to 10 billion, it's going to be real hard to go from 10 billion to 100 billion, because you need $90 billion in order for that to happen. Well, the company is only worth 1 billion right now. That's why a company like Nvidia can come and just say, you know what? I'm gonna buy a whole company for 5 billion because we worth $3 trillion. What's $5 billion to a $3 trillion company? And that's what I'm banking on. I'm banking on it getting taken over by another company where you'll see the market cap explode in price, or over the years, just because of the way things work, money will start flowing in this company. And with the 200-day moving average angled up, it's giving me a higher chance of making money to the upside, with this company being small. All right. So that's why I'm sticking with SoundHound, which goes back to an AI company that I'm investing in because it's a derivative of AI, right? Cool. Shanika again says every video I watch has been meh. I don't know what you mean by that, but you're watching this video today. So actually, a lot of the videos that I did in the past probably wasn't talking about the 513. I probably talked about the 200 day a lot, the 200 week a lot. And all you got to do is really add the 513. And it really, once you add the 513 and they cross over just by what I showed you today, that's really all you need to know. Once that 513 crosses to the upside, 200 day is angled up, you got about a 10-day move where you can make money, or you can make money to the downside. All right. So Eric said CELH. All right, cool. So what is CELH? I think that's a biotech company. No, that's Celgene. What is I think you got me on this one. So what is CELH? CELH is Celsius. Oh my God. So Celsius is booming, guys. Celsius is if you've been drinking like Monster drinks, Celsius is like the competitor, and I mean this thing is moving in price. Now, I need to know what the market cap is, because the market cap is very important. What is the market cap? I wonder if I could just put what is the market cap and it knows that I'm talking about Celsius. Is it going to ask me? No, it's going to do it for Celsius. That's pretty cool. That's why I like ChatGPT also, because it kind of knows what you're doing. So Celsius is $8 billion in size. Now, this is important. I want you guys, this is how I compare companies when I think about buying them. All right. Perfect, right? So if I'm looking at Celsius, the first thing I want to do is, it's kind of like real estate. I got a real estate background. So by having a real estate background, I always compare companies. We call it comps, right? Comparables. So if I go into a neighborhood and I see a house and it's worth $300,000, just because it's worth $300,000 doesn't mean you're gonna make money. I gotta compare it with something else. So if I look across the street and I see the same 3-bedroom, 2-bath house and it's selling for $400,000, even though that $300,000 house needs work, I'm gonna be like, yo, if I put about 50 or 60,000 into this house, I can probably make 40 grand. You know, if I put the work into this particular house. So I need a comparison to kind of figure out where it is, because if somebody was willing to pay 400, they'll be willing to pay for this one that's 400 if I put the work into it. So when I'm looking at something like Celsius, what can I compare it to? Well, I can compare it to Monster. So when I see $7 billion, I don't know if I know that 1 billion is what Joel likes to buy companies at. But what is that? Is that high? Is that small or big in comparison to companies that are similar to it? So you can do one or two things. You can Google what are different companies or what are different stocks that I can buy that are similar to Celsius. You can even ask Chat GPT that. Or if I have one in mind, I can say, hey, what is the market cap of Monster? And let's just have like what do you guys think it can be? 50 billion, 100 billion, 10 billion, 20 billion? We don't know until we put it in there. So if we put that Monster is worth 50 billion, now it gives us an idea of how big this company can grow. If Monster is the leading company in that type of drink, which is I don't know what they which is energy drinks, right? With caffeine and all of that in it, then Celsius at some point can probably grow, even if it grew to half the size of Monster. Let's say Monster still is the largest company out there, but Celsius gets 50% of the market share. Well, then that's going to put Celsius at about $25 billion in size. So if I invest in it now and it's 8 billion, and I said, man, even if it gets to half the size of Monster, I can make 3 times my money. That is how you realistically tell yourself how much you think your investment can be worth in the future. If the company is growing in value and I put 10,000 in it, I can't expect my 10,000 to be worth $1 million one day. Unless of course it becomes, you know, $100 billion company. All right. Can it get to 100 billion one day? Yes, but that means it's going to have to surpass where Monster is currently. So that's how I'm able to take a comp, compare it to the same company, and because this company is fairly new, it can grow in value. For example, I like this company called Kava, right? Kava is supposedly the next Chipotle, right? So let me go ahead and pull up actually before we even look at that, let's look at Celsius's chart. So if we go and we look at Celsius's chart, first of all, we want to know, now here's something that's interesting. What do we notice immediately? We notice immediately that this 200-day moving average is angled down, so Joel ain't going to stay around. But Joel, it looks like it's turning around. And then, well, guess what? I can wait. I don't care. Look, guys, I don't care about missing out on something because there's always something for me to get into. All right. When the 200-day started to angle down, we didn't know where this stock could drop to. Now, there is a support area down here. You know, you're going to learn about support and resistance areas when you watch any of my videos. There's a support area there. There's like a resistance area right there. Okay. So even if you were buying this and it started to drop in price, even if it dropped down and you saw that the 200-day was angled down, you at least knew that it could probably get down to this $13 area. But check this out. I don't have to be the person to get it here. But because I don't care. If it's a growing company, I could buy it way up here and still make 10 times my money. I'll show y'all that in NVIDIA. You don't have to be the first person to get in to make money. Once it started to go around, what if I told you Joel would have waited all the way until here to get in? Now, would I have gotten in way up here? No, but I would have gotten in the very first time I saw a 513 cross to the upside. All right. That's going to happen somewhere around here. So I would have bought it somewhere around here. Once the 200-day started to angle up. So once the 200-day started to angle up, I would have put it on my alerts for something that I'm thinking about buying. Once this bad boy started to drop in price, using the what would Joel do method, I didn't have to buy it way down here. I don't care about, great, you bought it for 13. I'm going to get it for 30. Okay. And then once it started to go down in price, starts to go back up in price. 513 cross happens right there. I'll probably get in somewhere here, or well, it didn't really break the trend really until here. 200, the TTM squeeze started to go blue. That's where I would have bought it at, right around $30. It would have got all the way up to 40 and started to go down. Now, look, I would have stayed with the stock because the 200-day moving average is still angled up. But then, remember, I bought it somewhere around 30. It got up to 40. But then, look at what starts to happen. It still popped one more time. It got all the way down to the 200-day, which is where you're supposed to buy this because it's the average price. As long as the 200-day is up, I'm going to increase my luck in making money. And then that bad boy rolls all the way to about 50. Now, remember, I got in somewhere around 30. Still riding it, 50, 50, 50. Then it got to 68. Now, would I have sold it here? Nah. I wouldn't have sold it. 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 I would have stuck with it. I would have stuck with it. Then it got to 100. Why did I stick with this trade? Because the 200-day is still angled up. I'm not getting out of this until the stock market tells me to get out. Not because my cousin Jim told me to get out. I'm not getting out until the 200-day moving average starts to either go flat or starts to angle down. That's when I would have gotten out of this particular trade. Yes, I would have saw this vicious sell-off. Then once we got to the 200-day, I could ask myself, do I want to stick with this or not? I'm already up 100%. I bought it at 30. It's at 65. It got to 100. I get it. I could have sold it at 100. Isn't it interesting that it got to 99.62? Why didn't it go to 101 or 100.5? Because that's a mental area. And then it tried to get back to that price again. Even when it got to 99, it tried to get to it again. And it got to 99.4. That's what we call a double top. When a double top happens and then you get a crossover to the downside, it usually goes back to the next support area, which is the 200-day. I probably would have sat in it for a second. And then, at the worst, I would have been out somewhere around here. Maybe I would have sat in it for a while thinking that this was the turn. But then once you got this, it's you start to see the 200-day start to angle down. I would have been out somewhere around 57, still would have been up 80 or 90%. And then it started to go down. And now I wouldn't be in it because I'm not going to stick in anything unless I really believe in it, like SoundHound. I'm not going to stay with this company just because of all the good information I'm hearing. I'm not buying this unless the 200-day starts to angle up. Now, as a trade, can you take this trade right here? Yeah, you can for about but look at what happened every time it went green. You got 2 days and it turned around. You got 2 days and it turned around. You got 2 days, it might turn around because when the 200-day is angled down, you don't want to stay around or you want to short this particular company. All right, cool. Hopefully you guys understood this. All right. Joanna said Palantir, one of my favorites, long. Palantir long term. Should we get on board now or wait for a drop? Well, the question is, you said long term. All right. I say whatever the 200-day is. Look, before we even look at this, if the 200-day is angled up, we want to increase our luck. If it's angled down, you don't want to stay around. So if the 200-day is angled up, are we going to buy it right there? No. We're going to wait for it to get down to the 200-day, or we're going to wait for it to drop, get a 513 cross back to the upside. That's where we want to get in. That's the what would Joe do method. So before we even pull it up, what direction is the 200-day angled? Up. Why have I been screaming Palantir all year long? And y'all have been, oh my God, Joel, I can't believe you knew when to get in this particular stock. How did it start going up? How did you know it was going to happen? What class do I need to take? I have 10, 15. I'm like, you don't need 10, $15,000 to learn this. You need to just tune in when I'm doing these free sessions and then do the homework and quit trying to have everybody else buy your stocks for you. Okay. Now look at here. When do we get in this? If the 200-day is angled up, you get in every single time you see a 513 cross to the upside. Now, if you're doing it long term, I'm going to wait for it to jump like it did. But am I buying it here? Heck no, I'm not buying it here. How many days? Why am I going to buy it there? Look at how many days it's been going up. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14. It's been up for like 21 days. This is the most that it's been up day wise. Do y'all know I have an alert set right here to sell it? It probably sold it today. I got an alert to sell this thing when it gets to 45.50, and I think it hit it. And it might have hit it while we were talking today. It got to 44. Oh, that's crazy. It got to 44.38. I literally have an alert to sell this stock that I'm in long term because this is not sustainable. Stocks ain't supposed to go up for 30 days. But look at the moves. Look at how long it goes up. When this 513 cross happened in May, it didn't start petering out until July for 60 days. All right. So once this started to go up in August, well, it's October now. So it went up, came back a little bit, and now it's just up. 200 days angled up. You stick with this company. I don't care what negative news you hear because all that is noise. It's people that don't know what they're talking about. Because the only thing that matters is, are the billionaires buying this company and making it go up in value? If that's the case, I don't care what they say on TV. I don't care what your Uncle John or Uncle Tim said about the company. I'm going to stick with the company and make money. Fundamentally, all right, the company Palantir is an AI type data company that the government is using. So they're getting government money. So unless you wake up one day and the government fires Palantir, you stick with this company because that's guaranteed money coming from the government who prints money, who's the richest. The government is the richest entity on the planet. So if they're paying my bills, that's the kind of company I want to be in. That's why every other day I'm talking about Palantir in the room. I'm giving y'all free trades, free money all the time. Who's your stock star today? 9 out of 10 of them is Palantir. All right. It's making me money. All right. But long term, I'm not going to get in way up here. I'm going to wait for a little sell off like this. And then I'm going to wait for it to start banging back to the upside. So once it starts to sell off, it feels painful. It's like 10, 12 days. And then it starts to shoot up in price again. Takes a break for like 12 days. And then it shoots up in price. All right. So is there a support or resistance? I'm sorry. Is there a resistance area it can go to? Well, look, guys, now I know why. Why do I have, and listen, when we get off today, I might just sell it straight up. Why do I have an alert to sell it at 44.50? Because the all-time high is 45. And I want to get out a little bit before it reaches the 45 because I've made money from down here. I got in way down here at like $10, $12. And now this bad boy is 40, 12, 24. And I made a 200. What? Let me see what percent return I done made. Easy money. That's what, a 350% return. A lot of you guys haven't made a 30% return in the stock yet. I'm trying to show you guys how to do it for free. It's easy. All right. You guys are picking stocks that got 200-day moving averages angled down because you think it's on sale because it's cheap. Oh my God, Joe, this was $45 and now look at what price it is. It's 10. It's on sale. Okay, the person that bought it for $20 thought it was on sale. Then that thing went all the way down to 7. From 20 to 7. Joe, why isn't the stock turning around? Because you don't know how to trade. When the 200 day is down, I don't want to stay around. Period. Y'all keep doing it. But Joel, it's going to turn around. It's going to turn around. You hoping and praying. It ain't. When the 200 day starts to angle down, guys, it takes like half that time, at least 100 days just to get it to turn around. And that's if it starts to go up. If it continues to go down, it's 100 days from that day. Why are y'all not learning this fun? This is like literally trading and investing 101. If you are hearing about the 200-day moving average for the very first time today, I want you to go fire your teacher and get your money back because you are getting bamboozled. They don't know how to trade or invest. The 200-day moving average is literally the most used indicator on the planet. This is what we use so that everybody and anybody on any planet, on any continent can evaluate this stock and we all see the same thing. So if this is the first time you're seeing this, I promise you, fire whoever you've been learning from. Or ask for some receipts. Say, this stuff that you're teaching me, I need to know that it works. Because this guy named Joel says, if you don't know what a 200-day moving average is, you might need to do a consultation with him. All right. I'm teaching you guys the fundamental basics of the market. All right. Very important. All right. Spend a lot of time here because I'm trying to make sure you guys understand this. All right. Good question. JQ says, Joel, I absolutely love your chat GPT. Thank you very much. I appreciate that. All right. Spent a lot of time creating it for you guys. It's literally free. I know the What Would Joel Do app, you got to pay a subscription service for. The chat GPT is free. Use it. All my tools. Use it. All right. All right. Amanda said PLL. What the heck is PLL? You got me on that one. But you said PLL. All right, PLL. No. What do we see, guys? If the 200 day is down, what? I don't want to stay around. I don't care what you feel about the company. I don't care. But Joel, lithium is what they use in every battery, every electric car. Well, obviously, the powers that be have been selling it. Now, what are the pros? The pros are, and I don't want to beat you guys up over companies that you guys are in. All right. There is a low that was $4. We're at 14. That means this bad boy could go to 4. I don't have to buy today. But Joe, look. You got a 513 cross and it's going up. Great. You got a 513 cross. It's been going up for 15 days. I don't have to get in right here because what stocks usually will do before the 200-day turnaround is it'll do this. It might do this. Then it might go higher. Then it might come here. Then it might go a little bit higher. And then you might start seeing it do this. And then by then, this would have started to turn around. Why do I have to sit here and pray when I can just wait for the 200-day to turn around? Then even when it gets to 20, guys, it's probably going to drop back to the 200-day because remember, the 200-day is going to do this. It's going to start turning around. So right around the 16 area is where I'm going to get in. Now, so you get in at 14, hoping that it's right. I'm going to get in at 16, knowing that it's right. I'm going to give that extra dollar to you to keep sending me messages and tell me what's going on with this particular stuff. Joel ain't getting in until it's about 16 when that 200-day starts to turn around. And I know that fundamentally and technically it starts to turn around because I know how the pension funds and the mutual funds that are investing in this think. They're paying people like me to tell them when it's time to buy. I train those guys. All right. And that's what they're looking for. Yes, somebody's going to come in like a Warren Buffett and buy first. Somebody's going to buy it who doesn't care if they lose money, or they know that they can turn the company around, or it might be the own company buying back their own stock. It might be the government buying it. I don't care. I ain't buying it until they buy it, and then they're buying enough of it where the bottom, or it falling down in price. They stop the fall in price, and then I'm going to jump in there and get it by using this 200-day, knowing that the 200-day is angled up. Once it's angled up, I'm going to increase my luck on making money. Okay, cool. So if you're in it, I see that it's up 5%. I don't know if it's a trade or an investment. If it's a trade and we at the 200-day, I'm probably going to get out of it, because we were up 4, 5, 6, 7, 8. We were up 12 days. The average stock is going to trend 10 to 14 days. You see, even when it went down, it trended down for 10, 12 days, went up for about half of that 6, then it went down. Once the 200-day is angled down, the more vicious moves are going to be to the downside. Once it starts to go up, I might buy it, but Joel ain't buying it long term or short term until this bad boy starts to turn around. Eric says, hey, Jay, check out Celsius Holdings. We looked at that earlier, approaching the 200-day moving average towards the upside. Looks like it's about to run. All right. We already looked at Celsius. So if you haven't looked at it, go ahead and check it out. Eric Schultz says, look at the wedge built on this PayPal run. All right. So PayPal, I haven't looked at its chart in a while. All right, guys, what do we see here? This is what we love to see when a company is bottoming out. You're going to start seeing it round out. It's called, what we call this is a rounded bottom. I love round bottoms. All right. So the 200-day is starting to round out and starts to go up. Does that mean you get in right there? As an investment, buy it. If it's a 2, 3, 4 year, you don't have to wait for a 513 cross. Remember, as long as the 200-day is up, I'm going to increase my luck. And then when I look at where it came from, PayPal came from $300 a share. Jeez Louise, we're at 80. If I was to buy it right here and we were to get back to the price that we were, that's a 290% return in PayPal, a company that y'all talk about every day. A 290% return is huge. Now, how long will it take? It might take a couple of years to do it, because the last time it was at this particular high was 2021. It might take 3 years to get there. So you'll probably average about 100% a year. I put 10 grand in this bad boy. It might be worth $30,000 or $40,000 by the time my kid goes to college. Well, my kids are in college, but if you were investing for something, right? Some people do that. I teach you guys how to do that with a stock mortgage. Like, why buy a car for 40 grand when I could put $10,000 in that company, and then 5 years later, if it's worth 40 grand, now I have the capital to buy that car. I really only spent 10 grand on it. That's what I did with Tesla. I only spent about 30,000 on Tesla, and Tesla's stock price grew like what, 1,000%. My $30,000 was worth like 300. And then y'all wondering why I'm buying cars cash, because I'm using the market as a cash cow. I'm going to put the money in a company that I feel is growing in price. I don't think Tesla is going to grow like it did in the past, but if you believe in that particular company, that's how you're able to capitalize on the market. But the 200-day is angled up, just to answer Eric's question. All right. And there's so many different, there are wedge patterns, there's flag patterns. So there's different ways that you could call this. But what he noticed was there was a wedge pattern right here, right? So you go up here, you see that? That's a wedge. All right. And when you see a wedge pattern like that, when we break out of that wedge, we go higher. Okay. I also call that a bull flag. I don't call it a bull flag when I'm teaching it, but if you notice, stocks, remember, stocks stair step going up and down. They stair step going up. He's saying maybe we get here and then we do this number right here. Okay. All right. But if we're going to do that, where is it going to go? Well, guys, look at this. PayPal has so much room to run to the upside. It's scary. So you might not like PayPal, but this is why I've been screaming, even in the ultimate member room. I told everybody I'm back in PayPal. Like, this stock is looking really, really good. And remember, I put a post out last week, that Will Ferrell commercial. It's hilarious where he's singing about paying with PayPal. So PayPal introduced a new feature where, you know how you can go to the grocery store anywhere and you can use Apple Pay to pay for everything. There's now, like, I don't know if it's called PayPal Pay, but there's a PayPal Pay where you can use PayPal to use it. Now, I don't want everybody to do this, but I always take advantage of companies when they create a new payment system. So when Apple, so when Apple Pay first came out, I think Goldman Sachs was handling the financial backings of the company, but Apple Pay allowed you to pay with your own credit card, but they also wanted you to use their credit card so that they can make money off of it. So there's an Apple credit card. Well, I knew that they were looking for people immediately to give money to. So as soon as I saw that it was available, I was like, "Yo, give me a line of credit." And sure enough, Apple Pay gave me a line of credit. Well, the same thing happened with PayPal. The minute I saw that PayPal had a payment method, and I knew that they were going to be using a credit card, they need individuals like us to fill their quota of customers to have credit lines. So, if you have decent credit, go up. I'm not telling everybody to do it, but they're giving away lines of credit. So I was able to get a nice 5-figure amount of money in credit lines that I don't even use. I use it to make I play my goal is to try to get my credit score over 800. So in order to get your credit score over 800, you got to have lines of credit that are really high, but using a little bit of that credit. So once you get a line of credit, you should see a jump in your credit score. And sure enough, I saw a jump in mine. So I don't encourage people to use it if you don't know how to manage it, but we're all adults and we're all here. But yeah, I was able to get approved for a credit line just by applying for it, and they're giving away money. So look at what PayPal can do. It is showing a squeeze to the downside. So short term, it might go down. But if you're a swing trader in PayPal, or if you're an investor in PayPal, you probably want to start trading this bad boy. And I mean, this might be the time that it turns around and it goes back to the 200-day, especially with the TTM squeeze going red. Last time the TTM squeeze started to go red, we had some short-term bearishness. Well, the same thing is happening right now. So even though it's forming a wedge pattern, it looks like it might drop for about it looks like when it sells off for about 5 or 6 days before it starts to move to the upside. All right, good question, Eric. Oh, dang, and I covered. I didn't. I didn't take it off. So hopefully you guys were able. I guess you were able to see the chart, but you weren't able to see the squeeze. Let me take it off real quick so you can see it. So what I was saying was this is starting to turn red, and when the last time this turned red, we went down for a couple of days, and look, it's starting to turn red on the squeeze as well. All right, Shanika said, yes, I've already and frequently used your GTP. Thank you. And I'm checking out Investopedia right now. Great. Amanda says she bought a put, and I believe we were talking about PLL. Oh, great. So if you bought a put, then you are on the right side of the trade. Remember the PLL, the 200-day was angled down. So that looks like a good trade. Amanda? Denise says, I love how you teach in such simple, easy to understand terms. Thanks. Well, thank you. That's my goal. When I created the What Would Joe Do method, I literally, my wife, my sons at the time that were young, they were complaining at how difficult it was to understand a lot of the stuff that I was teaching. So I said, you know what? At the time, they were like fifth graders. So I used to have this thing, are you smarter than a fifth grader? And then I tried to create a strategy where if a fifth grader could understand it from the show, then adults and everybody else should be able to create it. And then what I found was that, this is how I'm trading anyway. Why am I getting so advanced? Like, just teach the fundamental basics, and then you can develop your own little crossover, or develop your own little jump shot. But for the most part, a lot of you guys are struggling with just literally these fundamental basics of buying. There is a way to buy low and sell high. It's just that a lot of you guys are doing it the wrong way. You're buying it on companies where the 200-day is angled down. You don't buy low and sell high when the 200-day is angled down. You do it when it's angled up and it pulls back to a support area. That's how you buy low and sell high. All right. Jerome says, I made it on the live. Y'all need to look at a lot of Jerome's posts in the room. Very educated. Sees the market like 80% of the way that I see it. So tune in to a lot of his posts, because there's a lot of education behind it. And he's one of the few people in the room that are giving, even though he's not receiving anything from you guys, because he knows just by giving, just like myself, you're going to receive those blessings in other ways. So keep up the good work, Jerome. Jerome. He also said, let's look at BSX long-term investing and its crowd. And its crowd a go to get back in. All right, so BSX, and I'm gonna have to get through this really quickly. All right, so BSX is at its all-time highs. Y'all know I ain't buying nothing way up here. All right, Boston Scientific. What I'm gonna do is I'm gonna wait for it to pull back. And you guys can check the market cap and all that out on your own, because I want to make sure I get to everybody's questions. It's at its all-time high today. It's no way in hell y'all going to catch me buying something at the all-time highs as an investment. I'm going to wait for a pullback. And, I'm going to wait for a pullback that looks something like this. And when it pulls back and you get a 513 cross, 5-period moving average, 13-period moving average, bam, there's the trigger. I'm going to get in somewhere around there. And that's what I would do if I was waiting on that stock, CrowdStrike. So if you guys know about CrowdStrike, me and my family were taking a trip to Canada. We were going to Niagara Falls. And do y'all know that was the same exact weekend that CrowdStrike had a problem? So CrowdStrike is a cybersecurity company. Companies like Delta hire CrowdStrike to handle all of their cybersecurity stuff. So they had a glitch when they were switching over to a newer, updated version, and it literally messed up like hundreds of different businesses that were using CrowdStrike. So CrowdStrike at the time had a 200-day moving average that was angled up. So even if I wasn't so what I did, and I made the mistake that everybody else made, was I was listening to what people were saying about the company, and the information was so negative that all I can think about is how negative this company was. So once the company started to sell off, it went through its 200-day moving average all the way down here. What I should have done was, once the selling was done, if the 200-day moving average is angled up, you're still dealing with a good company because the 200-week moving average is still angled up. Okay. And because the 200-day moving average was still angled up, that's still going to increase my luck of making money. But what a lot of you guys try to do is you try to catch a falling knife. You see it go down in price and you're like, oh, it was $400. Joel, it's $300 a day. I should buy it today. And then when it went from 300 all the way down to 200, a lot of you guys sold, because $100 off is 33% down. What if I told you, if you just cut out all the noise and you turned off the TV and you just looked at the chart and you stopped listening to me come into the room and talk about my terrible story of how I had to drive all the way to Canada and back, even though we had a Wagoneer, which was great. If you're ever traveling, get a Wagoneer. They're like the best vehicles to be. They got heating and cooling. It was like amazing. But anyway, so we had a Wagoneer, drove all the way to Canada. I think it was like 16 hours. And then I had to drive back. We missed a day of our vacation. So I'm ranting and raving on how terrible this company is. And I'm an influencer. So a lot of people were selling their stock. And I apologize for that. I sold mine too. I was so upset with the company because I had been in it when it was 400. It dropped all the way to 300. I'm down like, I forgot how much it was down in one day. I think it was down like 20 or 25% in one day. Terrible. All right. So I'm just mad. So I get out, and then time went by. And then look at this. All if you had just put a line here, waited for the stock to break the trend, start going blue here, get a 513 cross right there. I could have got back in at 239. And if I had gotten in at 239, look at what price the stock is today. So I saw it go from 239 all the way to 287. Then it dropped down in price again. Guess what? I came into the room. Well, I didn't tell you guys, but I told my ultimate members, I'm back in CrowdStrike again. Even though I missed it here, which was 240. Even though I sold it here and it dropped. And I could have re-entered at 240. And it went up in price. And then it dropped. I re-entered this trade right around 260. Which was higher than the price that I sold it at and higher than the price I could have re-entered at. So I'm in CrowdStrike at about 260, and now we're sitting at 318. And now I'm not as mad anymore. And guess what, guys? When I was in this stock and it dropped to 2 something, I was down 30%. Well, guess what? Just by getting in right here, I'm up 20%. I got 20% of the 30% that I lost. And that was like some of the worst news you could ever hear a company have. And I got room for this bad boy to keep going. And if you're swing trading this bad boy and you're in after this 513 cross, you probably can hold it for about 3 or 4 more days. Because remember, stocks are going to trend for about 10 to 14 days before they go sideways and start to go up in price again. But when it sold off, people bought it up so fast, it didn't even affect the line of the 200-day moving average. And this is what technicians look for. And this is what other companies were like, whoa, I'm missing out. I need to be in this particular stock. All right. So sorry if I didn't get to everybody's stock today, but I got to get out of here because I got a tea time at 3:30. I enjoyed you guys being here. You guys had a lot of great questions. I'll try to do this more often. I know I say that every time, and then I don't do one of these for like 3 months. I'm going to try to do these more often. You guys just got to get on me. All right. Because y'all know every Friday, if it's a sunny day, I'm trying to be out on the golf course. All right. So again, if you have any questions, if you have any concerns, you can always message me at What Would Joe Do through Facebook. Go through Facebook Messenger. Go to What Would Joe Do. I don't care what your question is. I'm not going to charge you guys for asking me a question. All right. But try to be succinct with the questions though. Sometimes you guys will send me like 500 stocks and be like, can you analyze all these stocks for me? And I'm like, come on now. Like, I'm not your B-boy, but I will help you out. Like, but you guys can always reach out to me. Remember, you can go to my Ask Joe GPT if you have any questions, market cap, any of those questions about a particular stock that you have. If you have any, if you want to do one-on-one consultations, you can always, if you have one-on-one consultations, you can always go to my calendly.com / Joel. I think What Would Joel Do? And you can book a one-on-one consultation. You can go on there. You can book your consultations on your own. People have been trying to get me to get on Calendly for like 4 or 5 years since I started doing consultations, and I was just stubborn and didn't do it. I like to do all the work on my own. So I'm trying to, even though my kids are going off to college, I'm trying to give away a lot of that control issues that I have and allow you guys to book the consultations if the availability is there. So I'm coming to you guys from Decatur, where it's greater. Happy Friday, and I am out of here. Peace.